a bet on interest rates, and one very exotic idea I had was that we would pretend that we were doing uh, puts and calls on Treasury futures. The reason I come up with that is I think that there are a lot of small interest rate movements that would just be kind of a push as far as a bet goes.
Hmm.
But if you could make real money on an out of the money put or an out of money call, that would be a definitive win.
I mean, isn't
So
the simple answer just to say that right now the 10-year treasury is like 419, I think, or something close to that. So one takes the over, one takes the under. Isn't
yeah,
that that's
that's
the simple
reasonable.
that's the simple way to do it, right?
The simple way, yeah. But yeah, but the reason went into that rabbit hole about thinking about financial futures and options is that I was trying to figure out what is the market telling me about which way that 4.19 is going. And I think the yield curve, such as it is a little bit downward sloping. Is that right?
That's also a good question. So right now, uh, yes, I believe so. Let's see if I can pull that up. Um, so yeah, it looks like the 2 year is this is just the 2 year is 392, the 10 year is 413. Uh,
Okay, so
so
that's upward sloping. Okay,
right.
all right, but we don't know how much that is relative to normal.
Well,
Um,
here's the historical. We want to see the 210 spread. So here is, I'm looking at it on a computer that I have next to me. So the 210 spread, uh, right now it says is 21 basis points, and uh, it shows the average. Is it the average? Is this what this line is? I'm not really quite sure what this line is, but it's pretty it's a touch below, I guess. Maybe if I turn my screen around, that'll show it. That might be a little risky here, but this is what it
okay,
looked like.
so it looks kind of like the historical average. So
Yeah.
so let's say there's no spectacular term premium going on. So
Oh,
there's a slight, so
no,
you say
I,
there's a slight
I
upward
did
tilt.
something wrong with my stand here. Let's see how
Okay.
I fix that.
Okay. So
Um,
there's a there's a slight upward tilt to the yield curve. So
mhm.
there's a slight expectation that rates will go up. So there's a slight expectation in my favor if I'm betting on rates going up,
Right.
but not much to get
Yes,
excited about.
I think that
Okay.
is correct.
Okay. So that, so my first, thinking about betting on interest rates, the first thing I think of is, I don't know, I can't believe I would outguess the market. So what does the market say? And the market says pretty much they'll maybe go up a little bit, but pretty much kind of stay the same. Is kind of my
Hmm.
read. Um, so now, to make the case, one way or the other, rates will go up or down. There are a couple of, well, a couple ways to break down an interest rate. One is to have a real interest rate
Hmm.
and then add inflation into it. And so if I'm going to say that interest rates are going to go up, I've got to say that I think inflation's going to go up, and or I think the real interest rate is going to go up.
That makes sense. Yeah. I mean,
And
that's implicitly, I mean, you can also just think about it conceptually, like why would the 10-year rate go up? It would presumably go up because inflation is going up, right? I
yeah,
mean, they're not going to be perfectly linked, but they should be more or less.
yeah. So in some sense, we're making that bet. Um, and so what? Tell me why inflation is going to hold steady or go down.
Well, I think a few reasons. Number one is if government spending declines, then inflation should decline. And right now, we've got a crack team working on reducing government spending. I don't know if it'll work. I'm hopeful, but I don't know if it will work. I suspect that at the moment their efforts are a touch overstated, but I'm hopeful. So if they in fact do succeed in cutting government spending, then interest rates should go down. So that's number one. Number two is interest rates might go down if the economy weakens, and so then you're going to see inflation go down, and the interest rate will go down. So that would be probably my second expectation. So could the economy weaken? Absolutely, it's very plausible that'll happen. So I think those are probably the two biggest causes. The third I might suggest would be if we get productivity growth, whether driven by AI or otherwise, then the productivity growth, all else equal, I think would be disinflationary, and that would lead to interest rates going down. So those are probably the three big ones that I would think of off the top of my head. I mean, you could think
Okay,
about other like geopolitical things, but like that's probably the three big ones.
okay. So let me give the counter arguments to those three in kind of reverse order.
Hmm.
First of all, on the uh, higher productivity from AI front, that will increase. That would have the effect of suppressing inflation, but it might increase the real interest rate because there could be a boom in investment in AI related
Right. I
stuff
was thinking
in the
about it sort
short
of like
term.
all else equal, but
Yeah,
sure, you're absolutely right.
yeah.
Yep.
Um, so let's see. The second one, a recession. I think we could actually have stagflation so that a recession might not do as much to suppress inflation as you might think. And the third one on the government spending, um, you have the luxury of not being close to the Beltway, and I'll tell you, around here, it just the resistance just gets all the noise. I
Hmm.
mean, there's a lot of noise about what Trump and Elon are doing, but it's all so negative that um, I'm pretty pessimistic that it will accomplish a lot. Um, there's all sorts of talk about Congress now putting in place legislation to make sure that the government spends the money. I mean, just the world inside the Beltway is just, I don't know, it's its own world. Um, and I'm just, I've been pessimistic from the get go. I give Elon credit for trying, and I give him credit for all the success he's had in other places. But this is the the DC bureaucracy
It's
and
tough.
the stuff that surrounds it, the ability to use the legal system and so on. It's just an awesome sight to behold. Um, and Also, just so far, what they've found in terms of spending is kind of rounding error, and so that raises the question of whether President Trump really has the stomach to make really non way above rounding error
Hmm.
cuts in spending.
So the first parallel that I think about is um, when Javier Milei became president in Argentina, which is now about a year ago or so, I
Mhm.
think the press was incredibly pessimistic about his ability to achieve anything, and all I read about, again, as a total outsider, I've never even been to Argentina, but all I read about was he wouldn't succeed. It's not possible to cut anything meaningful, that Argentina was the best it could possibly be. I mean, there was just endless speculation that he would fail, that he would be forced out of office. The opposition was too strong. And it seems he's making a difference. Certainly, if you go by the rate of inflation, interest rates, the strength of the Argentine stock market, like he's making a difference. So I think now he had incredible, intestinal fortitude, it seems, to do this. But he's doing it, even though the commentary class insisted it wasn't possible. So my takeaway from that is the commentary class doesn't know anything about anything, and you know I'm fond of saying, no matter how much you hate the media, you don't hate them enough, and I would probably use that phrase again here. Like, I don't trust that when they tell me that this is or isn't feasible. So that's sort of number one. Number two is, I do think so far they have barely scratched the surface. I don't know how much fortitude Musk and Trump will have for that next round of the not low hanging fruit, right? Not the condoms being sent overseas kind of stuff that they can cut easily and make a big thing about it on Twitter. I think it's the harder stuff obviously will make a difference. So, will they have the fortitude to cut a significant portion of our defense budget, right? We spend close to $1 trillion a year on defense. Will they be able to do that? I just don't know. I am optimistic for the reason that they have a majority in Congress and the Senate. I think that the power of this resistance is not nearly as strong as it may seem inside the Beltway. And I could be totally misreading it, but I don't think these people have a lot of power. That I think they want to have power, but I think they don't. I think the mandate is get rid of them as much as possible. And then the last piece is, I worked at Microsoft for a few years, and I led our capital markets division there, but worked very closely with the government team there. And so I worked on some government procurement stuff, and I remember seeing how insane the government software procurement process was. That everything wasn't, how do we make this cheaply and effectively? It was like, well, there's a requirement that the font size of this has to be, size 14 and bold and only on Tuesdays. And it was just like crazy stuff. I think there is a significant opportunity to cut costs just by modernizing the IT infrastructure of the government. Whether that is starting with Palantir as a as the base. Palantir's Gotham is their government application suite and the government side of what they do. Maybe that's the solution. I would guess they could do it. Like, if you gave them the money and the time, I would guess that they could get it done. So that could be a significant area for optimism, I think.
Yeah, well, we'll see. I think, I think that my guess is right now the public, notwithstanding the opinion of the local press here, that the public is probably more favorable toward the attempts to, make government more efficient, to shrink it, and so on. And that could help, help Trump, just as I think it helped Millet. I think Millet was able to somehow, I think people thought that what he was doing was politically impossible, and it turned out not to be, and that's great. But he did some very, very big, major chainsaw
Yeah.
surgery, And that I don't think that's even on the agenda yet. I mean, you can eliminate the
Now's the
Department of
time to do
Education.
it. Yeah.
Right. Yeah. Yeah. So we'll see. We'll see what the budget looks like. In when when does it include? Does it keep every program in the Department of Education or not? I mean, ultimately, you can't get rid of the Department of Education if you don't get rid of all the funded programs.
Right.
So that'll be
Right.
a
That's
question.
one. Will they cut defense spending?
Yeah.
Where that's going to be the biggest, right? Defense, maybe Medicaid or Medicare. Is there going to be appetite to do anything with those?
Yeah.
I just don't know.
Yeah, well, the appetite is probably there on Medicaid, and of course there are howls coming from the usual quarters on that, but that
Hmm.
that would be big. I think Medicare less consistent with what Trump typically promises, so uh, that
I don't know
seems
if you
less
saw
likely.
there was a poll that was released today that showed Trump's support by demographic and by age group. And his numbers with the 18 to 39 demographic were absolutely off the charts. That's actually where he has the most strength right now. And I have to wonder, is there a part of Trump that is realizing that his core constituency is not the older people who typically vote, but maybe it's younger people? And maybe what makes him a hit with those younger people is, what if housing costs come down? What if interest rates come down? What if the stock market declines and it creates an entry point for people? Is that a plausible scenario where, instead of saying a declining stock market is the worst possible thing, maybe he starts to spin it as a good thing because his constituents that are young are able to have an entry point? Like, I'm just speculating
Yeah,
here, but
right.
you never know how he's going to think about these sorts of things. And it seems plausible that he may come to that point of view.
Okay, so he might decide that he'd rather favor the younger generation than the old. That's one scenario. Um, what I think a big reason I want to take the over bet, the bet on the higher interest rate, is not so much just the expected path,
Mhm.
what I expect to see, but the asymmetry of the risks as I see it. Um, that there's if we're going to be surprised, we could be surprised with higher interest rates just because maybe bond market resistance to the deficits that we're going to have, um, or surprised on the upside from inflation because of the way tariffs play out, or just the cumulative effect of all the government spending that still is going on. So that I think that's the reason that I worry. I don't see surprises coming that would go the other direction. Of course, they would be
Well,
surprises, but
right.
Mhm.
Right. The unknown unknowns, I guess. You know, I've had this theory that I know I've mentioned to you before, which is that we are not doing productivity statistics correctly in the United States. And I think that if you asked any investment banker, what's it like to do your job now versus what was it like to do your job before there was Microsoft Excel, you would find out that obviously they are far more productive now. It doesn't mean they work fewer hours, they just free up their time to do some other thing. And I think the benefits of IT in productivity have been undercounted for probably 30 years or more. And I have to wonder, will the same thing happen with AI? And will we assuming that I am right that we are undercounting the benefits, will we do the same thing with AI? Will we undercount the benefits, but that they will show up in a lower real interest rate? Uh, right? Like I might argue that uh, for the entire 2010s, interest rates stayed very low because we had undercounted productivity benefits, and that kept inflation down for the entire 2010s. And maybe that's the reason why interest rates were able to stay so low for the entire decade. So,
Okay, so if you're mismeasuring productivity, it's probably because you are overstating because or coincides with overstating the rate of inflation, right? So the inflate
yes, that's
so
right.
the inflation rate was actually
Um,
lower
y-
than what we measured, right? And that
Correct. Yes.
and so the that helped keep interest rates low.
Hmm.
Okay.
I mean, that's
So
the implication, right? That uh, because you had this productivity boost, it's disinflationary, right?
yeah. Um, no, I think that's a plausible story, and we don't even know. I feel like, yeah, that is the one positive upside risk, as it were, uh, that AI really does come through. I'd say my own view is I don't think that'll happen quickly, but if you were to price it in to happen anytime over the next, let's say starting 3, 4 years from now through the end of the 10-year window on the interest rate, then that would make the interest rate lower. Yeah.
Hmm. I
So if,
mean,
if
yeah, I think that's right. And I think I did some analysis. I'd have to pull it up, but I did some analysis, which again is it's a little bit of a strange thought, but my thinking was how many hours per week do you think the average household spends shopping for groceries? Like, just think about your own experience. How many hours per week do you spend shopping for groceries?
well, I sometimes think it's a hobby, so
Oh,
it
okay.
doesn't count.
Well, I mean, let's assume the average household, I think the number I found, I'd have to pull it up, but I think the number that I found was that the average household is spending something like 40, it was like 42 or 44 minutes per week or something shopping for groceries. And so my thinking was
It's closer to
if
42 hours in our household.
okay,
I'm
so
just kidding.
uh so my thinking was uh if you can reduce that amount of time because you can start ordering more stuff online, that's just an extra 40 minutes per week times some huge number of households that you've just created, right? You've just literally
Yeah,
created time and essentially wealth for all of those people through these IT savings. And that's what it is, right? That's IT showing up in the economy in a different way, in productivity, in leisure time, in time spent working. I mean, there's
yeah,
so many possible ways to think about that.
yeah. No, I think we haven't really scratched the surface on applications of especially of AI. It's um, you know I think of the release of Chat GPT as kind of the equivalent of the release of Mosaic, which you may be a little bit young to
I remember
remember.
Mosaic, sure.
Um, and that was the first graphical web browser for people who are younger than me. And between the time of the release of Mosaic and the time when sort of the World Wide Web became, clearly usable to, clearly making a difference in people's lives, was probably at least 5 years.
Mhm.
And although AI is itself seems to be regressing very rapidly. Like every couple weeks, there's a new release,
Yeah.
a new development. I think the actual effect on people's lives is. I think there are some people that's already a huge effect. I mean,
Hmm.
sort of software engineers. It's a tremendous effect on them, and other people who probably aren't revealing it how they're using it. But I think the big effect still may be 3 years from now.
I gave a talk recently about AI, and one of the things I said is that I work with a lot of enterprise customers, and you see them go, well, what can I do with AI? And the answer from the AI companies is anything. And then they're like, sure, but what?
Yeah,
And then you just go anything. And they're like, I don't know what to do with anything, right? And
yeah.
so you're seeing now this steady flow of startups that are basically creating what I might call skins for AI, where it is there's a company that just announced a big funding round this week called Unique. It's a Swiss company, and they have like 30 use cases for AI in financial services that they have structured for private equity, for banks, for hedge funds, and so like rather than having to go to one of these firms and say you can do anything, you can go to them and say, hey, for a small fee, you can use this pre-packaged use case for your specific field because no one can imagine it. Ben Thompson, who writes Stratechery, he did an interview that he published earlier this week with a guy named, I think Benedict Evans is the name. I don't know if you had a chance to listen to or read this interview. It was one of the best things I've read in a long time. I read the transcript of it. It was so information dense that I reread multiple paragraphs because I had to like process some of these ideas. And one of the things that he
Is there a paywall in front of that one?
there is a paywall, but I
Okay.
can forward it to you. I think you're allowed occasional forwards to friends, and so I can certainly forward that one to you. Um, it, One of the things that he says is that we are used to thinking of technology of computers for solving problems with definitive answers. So what is 3 plus 3, right?
Yeah,
And um, we're used to asking technology to do that for us, and it gives us the right answers. And AI is optimized for something that is far more probabilistic. And so we are not really sure what to do, right? We're used to asking, if we ask the AI, what's 3 plus 3? It may get it right, it may not. It's not actually great at that. The question that it's much better suited for is the one that doesn't have a definitive answer, like, what should I bring on a picnic with a 5-year-old, right?
yeah,
That's one where you're going to get a probabilistic answer that could be incredibly valuable, but the definitive answer is not doesn't exist. And so we're just these enterprise customers don't know what questions to ask, and if you tell them it can answer anything, then it
yeah.
doesn't help people.
And in some ways, it isn't even there for an answer, right?
Hmm.
It may be there to brainstorm. It may be there to try to translate a foreign language. It isn't. It's just a different thing. And what you mentioned earlier about companies putting wrappers on that does seem to be a very explosive thing where they're um, getting into vertical markets. Somebody
Hmm.
says, okay, I can do this for financial services or
Hmm.
actually probably some subset of financial services. Um, I can do this for restaurants or whatever. Yeah, I think that that's right. That next wave of sort of applications, vertical markets, it should be pretty interesting. Just randomly, since you uh, attended the World Economic
Hmm.
Forum, uh, any exciting things, any interesting things from like hallway conversation there that
Yeah.
that sort of affect your outlook and your view on sort of,
I saw
interest
Javier
rates?
Milei. I saw Javier Milei speak. He was incredible. I wrote in my recap that I remember when I was a kid, my parents would talk about when they were young and they saw JFK speak, and they were like so moved that they were near tears. And I always thought that was such a crazy thing until I saw Javier Milei speak, and I was so moved and hopeful that I was near tears listening to him. So that was very cool. Uh, you can always, this was my fifth time attending Davos, and you can always tell a bit what's very trendy, because you meet these, how do I put them nicely? Uh, Ukrainian women, and they're not necessarily, they're professionals of a certain profession, and but they don't want to say that, and so you say, oh, what are you doing here? If you meet one of these people and you don't realize what you're getting into, and they say, oh, I have an AI startup, darling. And of course, like 2 years ago, I have a blockchain startup, darling, and there's always something like that. Um, I think it was just like nonstop about AI. I think there was incredible optimism there, and there was optimism about Trump. I think a lot of the Europeans were like, why can't we have our own Trump? I mean, just a huge number of Europeans. I heard multiple people who said that they wished that they had "Make Europe Great Again" hats. That was mega hats is the thing that they all want to have now. You know, I know I wrote that we are living through like the largest preference cascade of our lifetimes, and I think that is continuing. So
So
much
there,
so,
there you really, again, I'm sitting here close to the Beltway, and there ain't no preference
right.
cascade going on here.
And you would think, Davos has this reputation of like it's all ultra liberal, and it's where,
Yeah.
Greta and the world leaders decide that we're all going to eat grasshoppers or something. And I don't think that's accurate. Davos is this very interesting thing where there's almost like two Davoses. So it's this very sleepy little town, and it has one main street in it. It's called the Promenade, and it's sort of shaped like an upside down U. And at the end of that street is, and I'm simplifying slightly, but at the end of that street there's what's called the Congress Center, which is where the like official World Economic Forum is. And to get into that building, you need a badge that costs hundreds of thousands of dollars, and your company needs to be a member of the forum, or you need to be a political person. But realistically, all that's happening inside that building is like, you can see the finance minister of Uganda or something there, and like I don't care about that. It's just not relevant to me or to what I do, and I don't see the value of that. Now, along that promenade, along that one main street, where throughout the year there's all of the normal stores, right? The butcher and the shoe store and all these things, those all get rented out for millions of dollars for the 1 week, and they're gutted, completely gutted, and turned into corporate lounges. So there's like the Microsoft Cafe and the Salesforce Chalet and the IBM Lounge. They all have these different places,
So where
and
did
they're
you get to see Millet?
Millet was at Bloomberg House,
Okay.
which is along the promenade. So Bloomberg has a place. There's the Wall Street Journal house. And like any big company or brand you can think of has a presence there. And they all want to have the best events, the best speakers, the coolest stuff possible. And so they're all competing to bring these people in, and you can just like go. I mean, some of these things you have to RSVP for, but you can kind of just go from event to event throughout the day. You build out your schedule of what you're going to attend and what you're gonna to go see. And so like if you stay on the promenade, which is where you'll find all of the business leaders all day long, none of them care about seeing like, the environmental people and stuff. So they're all along the promenade all day anyways. So if you're there, you really get the vibe of what's happening economically. And that was where it was just a very pro Trump, much. a rightward shift in a place that I found has always had somewhat of a more rightward bent than people acknowledge. But it was even stronger this year. So, yeah, I mean, that was my biggest takeaway.
Okay, so the world people are outing themselves the way Jeff Bezos outed himself, and so okay, uh,
Yeah.
all
I
right,
saw someone wrote on Twitter earlier today that the biggest two things in driving the tech industry rightward were number one, whoever got Elon Musk's oldest child to become transgender, and the second one was Lena Khan for pissing off Jeff Bezos by going on this anti-Amazon crusade. And that those were the two most significant things in the rightward shift in the tech industry.
okay,
It's a little
um,
dramatic.
yeah, all
Yeah.
right. So back to our kind of interest rate forecast. So what you're suggesting is that Trump is much stronger than he looks to the people in the vicinity of me, in the DC area, and that will ultimately lead to lower spending and presumably also a some deregulation, which we haven't heard much about, but which could be a really big deal. So part of you is saying we're kind of we might be in the 80s after passing through the 70s. Uh,
Yeah, I think deregulation could be a big deal. I do think Trump is much stronger and his approval ratings are strong. And I think he wants to move fast. And I don't think he cares about people crying about this. I don't think those people have all that much power. The people who do have power, I think, are the various consultants and lobbyists and those folks who are going to see their money disappear. It's not the federal workers who are going to lose their jobs. But, one other aspect that we didn't really touch on is the potential for demographics, or maybe not demographics is the right word, but population to impact economic growth and the data, right? If we are actually deporting people, that is shrinking the total size of the economy and the population, whether, presumably the people we're deporting are having have lower incomes, and that could be inflationary if you're getting rid of these lower cost workers. But on the other hand, what is economic growth other than population growth and productivity growth? So, if the population is going to shrink, then that's not good for economic growth, and that would potentially lead to lower real interest rates. So, that might be another area we didn't really talk about.
yeah, yeah. There's lots of potential effects there. I don't think it's a good one. I think that the knock-on effects could be surprising to people because if you want your uh, you know i- if you want your productivity to come from educated households and they can't find somebody to watch the kids, then that's going to be
Right.
that's it's
That's
going
not
to take
great.
a hit. It's going to take
Yep.
a hit. So that's going to be yeah. That although again, this is one of those things where just as sort of Elon has so far only found what amount to what I think somebody called it
Pennies. Yeah.
pennies in the sofa. Um, Trump hasn't really done mass deportation yet. It's been I think they've been seeking out criminals, um, which would be great. I mean, I
Yeah.
think that would
Right.
be
That's
the
good for the
best
economy, right?
outcome.
If we get rid of them. Yeah.
Yeah, get rid of the
Right.
criminals, let everyone, quietly let everyone else stay. That would
Mhm.
probably be for the economy the best outcome. Um,
I also
okay.
think that the economy, I think we are underestimating how weak the Chinese economy is. I think we've been underestimating how weak China is for a while, and that probably has some knock-on effect on the overall strength of the world economy. And I think Europe is very weak. Will Europe rebound? Will they get some strength and fortitude here? Like, I don't know, but it seems like those are two other issues that we haven't really necessarily given enough credit to.
Right. And, and any a sort of effect on inflation of higher tariffs could be offset either by a stronger dollar or weaker inflation abroad, and that would make things. So let me summarize quickly where we are because we got
Hmm.
people joining in the middle.
Sure.
So we're trying to bet on interest rates. We decided just the simplest thing to do is just say, well, the 10-year is 4.19 today. So if it's
Hmm.
lower on December 31st, Lee wins, and if it's higher, I win. Um, but if I were serious about betting or serious about committed to my view, I would be uh, buying put options on T notes on the ZN
It
in
looks
the
like the current rate
financial.
is 418 as of the market close today.
Okay,
Yeah.
all right. So that's the bogey,
Yep.
and reasons to be optimistic that rates will go down would include um, that there will be a serious cutbacks in government spending, and I just want to say ha ha to that. I just don't believe. I'll believe that when I see it. Um, no, I think every time um, I write about the national income accounts identity, I talk about or the savings side, including the budget surplus, haha. And but anyway, so that's one potential driver of things down. We could have economic weakness, a recession that uh, might repress inflation. Although again, I would worry more that we could still get stagflation even if we get a recession. I wouldn't if I
That's
were a
what Noah
bond
Smith said
investor.
today.
If I were a bond investor, I wouldn't be rooting for a recession for whatever. And and then the third, which is I think the biggest optimistic case is I think that productivity going up, um, and especially if it goes up, if we can see on the horizon big productivity gains from AI. So I think it's kind of where we are. Anything else you want to say, or should we just kind of wrap it up?
Yeah, I mean, I think that's a good summary. I think it's AI, but I would just say it's IT more broadly. I think AI is, of course, the trendy new thing to talk about, and it's incredible. But I think we're still totally undercounting broader IT. So I don't want to forget about that part of it.
Okay, so that
Yeah.
there's still sectors of the economy that are automating stuff, and I guess you know, in the real world, I look at things like healthcare and just how kludgy they are and how hard they are to change, and so the gap I think between potential and reality is big, and that
Mhm.
maybe reality will start to catch up, or maybe the potential will just go unrealized for another decade. But we'll see on that one.
Yep.
All right. Well, I think that's good. I think we ought to
Great.
just make it a wrap,
Sounds great. Well,
and
I'm looking
we'll
forward to either buying you lunch or to you buying me lunch in 11 months or 10 months time from now.
yeah, sounds good, and we
Yeah.
can update in the meantime.
Sounds great.
Okay.
All right. Thanks, Arnold.
Okay. Bye.
Take care. Bye bye.